we were able to put together a risk solution which allowed the project financiers to deem the project bankable without the need for a Ministry of Finance guarantee or a letter of comfort. And this was an important milestone in the evolution of risk solutions for infrastructure finance. And that is becoming very much the norm now, not just for countries like Indonesia, but I see that happening in Vietnam in due course, and other countries around the region. What type of transactions do we see? We see project finance loans for power projects, IPPs, BOTs. We see term loans for out to 15-year term loans for state-owned enterprises, sub-sovereign lending. We see ECA-backed buyer credits, the EPC contracts that are delivering these projects, and we may be asked to cover the commercial bank tranche as part of the overall financing package. What type of insurance cover is normally requested? Well, that can vary enormously depending on which banks are involved in the financing structures. We've seen banks go completely uncovered because they feel comfortable with their local presence in the host country. Others, much more risk averse, they would be looking for comprehensive non-payment insurance on the borrower, which in some cases can be a brand new SPV set up, no track record or history, no real financials to speak of. So that can be a challenging transaction to underwrite for the insurers. So it can be belts and braces cover like that, or it can be political risk only cover, where perhaps the sponsor or the lenders have isolated a particular risk, legal and regulatory risk, for example, in a host country, and feel that they'd like to hedge that. And that can be for a variety of reasons. Industry sectors that we see frequently, the majority are, I think, for power projects, power plants, transmission lines, and related projects, but also, not exclusively those, offshore oil and gas developments, toll roads, bridges, fertilizer plants, that kind of thing. In terms of current trends that we see in the market, I'm sure we're all aware of the macroeconomic factors which are affecting deal flow for all of us. Transactions are taking, on average, much longer to close, to reach financial close. The slowdown in the Chinese economy and inter-Asian emerging market trade flows is evident. The continuing low commodity prices is putting pressure on countries that export those commodities, which in turn is pressuring their currencies. And the oil price, there's talk in the market about it having bottomed out. I think IHS yesterday on the news were quoted as saying they see $50 a barrel. But at the moment, it's affecting infrastructure investment decisions still. And that has been a story of all of last year. It's been a story for part of Q1 of this year, although now we're starting to see some movement in some infrastructure projects, power projects in Vietnam, here in Indonesia. There are positive signs that projects that were tendered Q3, Q4 last year are starting to move forward now. We're seeing more loans originated and booked by banks in Asia, but the host countries may be in Africa, Namibia, Angola, Zambia, places like that. We are seeing also one or two instances of international lenders moving away from subcritical coal-fired projects and preferring renewable projects. I wouldn't say it's a waterfall, but there's one or two mandated lead arrangers who've decided to change tack, pull out. There's a few changes going on there. So we're watching that one to see if that's going to continue. I think it will. The insurers are very focused very selectively on when it comes to new banks, new sponsors. They will want to do thorough due diligence on those. They really prefer dealing with existing clients who have a track record, who've maybe worked with regional ECAs and know the form, know the process. We continue to see multiple deals involving PLN from all angles. Clearly, it's not about PLN at all. It's about tick box exercises for banks and helping make the transaction bankable, helping providing risk solutions that are going to give the lenders capital relief on some of these really long, difficult to handle from a balance sheet point of view transactions. Looking forward, we're already seeing an uptick in projects, infrastructure and power in Myanmar and the other frontier country, Mongolia. We expect that to continue, along with demand from both financial institutions and corporate clients for cover for sovereign non-payment risk and exchange transfer risk in certain countries. And we're seeing currency controls already in places like Nigeria, Mozambique, Egypt, Ukraine. So it's those sorts of things that are starting to become a concern in some Asian emerging market countries as well. The other thing I just wanted to mention were the sort of current challenges that we see in terms of trying to create closer collaboration between ECAs, multilaterals, lenders and private market insurers. One comment made to me recently by our head of construction, power and infrastructure, his team are quite often lender's advisor or sponsor's advisor. And the comment made was that he felt there was becoming a general lack of experience amongst some of the newer international project sponsors. And what that means, his point was that that makes these larger, more complex infrastructure projects much harder to put together and then to structure risk solutions around. So just an interesting feedback. I don't know whether that's particularly geographically based. We're seeing some newer entrants as the more traditional international commercial lenders, in some cases, retrench from their traditional hunting grounds. Whilst the private insurance market is commercially astute, innovative, flexible in its internal processes, which allows them to deliver these bespoke risk solutions, there are still limitations. So notionally, there's $1.5 billion to $2 billion dollars per project of capacity out there, and just private market plus some multilaterals, but when it boils down, there are a few commercial markers who can actually offer policy periods in excess of 15 to 16 years. That's come a long way, but there's still room for improvement there to match ICIEC on 20 years and some of the ECAs who can go longer. So scalability is an issue, and the solution is for closer collaboration. How do we encourage that? I think it comes down to information sharing, country intelligence on borrowers, on host government strategy for various infrastructure projects, closer cooperation on claims, more willingness to share information on loss recovery strategy. Sometimes there is a tendency for private market or multilaterals to work in silos. There is room where multilaterals could show more willingness to sign claims cooperation agreements with private insurers to give them the comfort they need to sit alongside. I should say ICIEC are very good at that, but others need a little bit more persuasion. And finally, speed of response. Multilaterals, I think, could potentially do more to simplify some of their due diligence processes where possible, and that's not always possible. That's understood.
Bureaucracy.
A bit of bureaucracy.
Miles, thank you very much. This was a great review of, and we've seen from a different perspective, mostly regional and global. We started at the UNIDO global view of how investment can move in fast to meet national and regional demands. We're also seeing how SMBC can contribute to regional infrastructure support and investment, and what means partnering with a multilateral insurer such as ICIEC. We've also seen from Miles shared with us their experience and their views about advising the key players in this process of lending and borrowing and ensuring of identifying risks, presenting them to all parties, and working out what are the possible mitigation strategies. What we have been missing so far is a national perspective, is a view from within a member country of how they see all these players going outside the borders of the country and moving around with the money, insurance, and all the packages, but how they can benefit the inside country demands. With us here today, Ms. Cynthia Rosalie. She is the Chief Executive Officer of Indonesian Infrastructure Guarantee Fund. This is our host. And before I get any accusations of gender imbalance, I must state here that it was following discussion with all the panel members that she requested to be left at the last so that she can benefit from the input of the regional and global perspective of the other colleagues. That said, Cynthia, we wanted to you please, besides of course introducing the fund and what the fund is responsible for and what it can do, specifically is to tell the audience how can a national guarantee agency such as IIGF benefit from partnership with multilateral insurer or regional insurance creditors such as ICIEC to attract more FDIs, which is always needed, to attract more investment from outside the borders to meet the national infrastructure development demands. You have the floor.
Bismillahirrahmanirrahim. Thank you very much, Mr. Moderator, Dr. Elwer. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Thank you for inviting me to be on this panel. I'd like to explain a bit about the IGF, the fund itself. So the Indonesia Infrastructure Guarantee Fund was established back in December 2009 by the government of Indonesia. So it's actually a single window for providing government guarantees for Indonesia infrastructure private-public partnership project. So it's PPP project on the infrastructure sectors. You name it, any sectors in infrastructures, economic infrastructure or social infrastructures, which requires government guarantees that it has to come through IGF. What the mandate is actually providing political risk guarantees for the projects. So the role of IGF is actually to ensure that the projects which is guaranteed by the government has to be well-structured projects. We need to look into the whole process of the project. We need to look into the feasibility of the project. We need to look into the risk allocation of the project, and we need to ensure that the project also has a good documentation which is bankable and acceptable by the potential investors, project sponsors, as well as the potential international banks. So that's actually the mandate. So from the government perspective, it's not only providing the support for the project to ensure that the private participation into the project, but also, most importantly, to ensure two things. One is to ensure that there's a discipline in executing the project. So you need to have the public sector, the government contracting agency needs to understand on how to really execute the projects. That is ensuring that there is a appropriate risk identification, risk allocation, and risk mitigation system into the project. So one is more in ensuring the discipline from the government contracting agencies. And second objective is to ensure that any projects guaranteed by the government of Indonesia through Ministry of Finance is a well-structured project. And that consequently should bring the more accountable fiscal risk management, because any single exposure from the guarantees provided by the government has to come through a contingent liability exposure to the government. So that's basically the idea. So IGF is mandated to look into a project. So our day-to-day operation is looking into the project preparations, appraising the project. So we have a bunch of advisors in my institution. So we have to look into the legal aspect, regulatory aspect. We need to look into the, of course, the financial economics of the project, similar to how the banks would look into the projects. And we also need to look into the fiscal capacity of the government contracting agency when they would like to enter into the infrastructure projects. And most importantly, at the end, we need to ensure that the government contracting agency has to have a risk mitigation plan along the guarantees that we will provide. So that's basically the mandate. And in developing this guarantee fund, we actually supported by the multilateral agency. We have a good cooperation with the World Bank. In fact, IGF is also have a certain amount of liquidity facility with the World Bank. And we have a good cooperation also with MIGA. And I think back in 2012, we have signed MOU with ICIEC as well. So I think understanding-wise, given this institution is the arm's length of the government of Indonesia, in supporting infrastructure projects, we are open to any cooperation with the similar institutions like ICIEC. And up to now, we have processed a number of projects. We have guarantees. We have issued approval for the guarantees for the amount of about $10 billion US. Sectors are power, water, transport. We have a toll road, waste, as well as the ICT. Last 2 months we have signed guarantees for building a broadband network of fiber optics broadband networks, across the outer part of Indonesia, as well as one toll road amounted to about $1 billion US in Java Island, which is guaranteed also by IGF. So when we guarantee the project, we need to look into a really case by case what matters to the investors and the banks for bankability of the projects. So I think that's about the mandate. And for the project itself, I think how we look into the projects are similar to how the banks look into it, and I think it's complementary to what the Aeon just mentioned just now, that you will try to mobilize the private PRI, or as much as possible, also ensuring the project is well structured from the private perspective, but we are more from the public perspective. So I think on that perspective, we can see that we will work both ways, so that we somehow will complement each other. Then we need to ensure that the projects which is guaranteed by IGF, then on the other hand will be getting some support from the private PRI, as well as multilateral support from either MIGA or ICIEC or anybody else, then would ensure that the projects will be sustainable, will get to financial close, will be developed by a good sponsors, will be delivering a service and product as what we expected. So I think that gives you the right picture of how IGF and the other multilateral as well as the private political insurance in the global and the regional context.
Thank you, Cynthia. I think I'm just recalling. Yesterday, I was doing the same task of today, moderating another session. It was on infrastructure connectivity, and we were honored to have on board of the panel the Director of Transport of the Ministry of Planning and Development of Indonesia, Baba Papamang. Yeah. And he presented and shared with us a very ambitious plan of infrastructure projects, mainly roads and rails and maritime, of connecting the massive number of islands of Indonesia. If you were an opportunity grabber today, you had ICIEC's Chief Executive Officer here. You had also the bank of SMBC with you here, the advisors of the brokers. You should grab a private sector and don't let them leave Jakarta before you get one of these projects signed off, and get all the investors, mobilize the money, and the insurers back it up. I think this would be an excellent forum for Indonesia to maybe showcase some of these projects and make it worthwhile for these businessmen coming all along to Jakarta. You expressed very clearly the role of the private sector and how can you provide that guarantee to the private sector in order to contribute to the resource mobilization. There's one element that we wanted to see, because we have outside the border players now. It's easier always when you do it within the national boundaries. But once you start getting investors from outside, usually things are getting more complicated. But how the PPP scheme works in Indonesia into attracting more FDIs, because of course you cannot do everything with the internal resources, and you still need external resources to come in. You have already the multilateral insurers such as ICIEC, and you have the international investors, but how do you see the role of the private sector within Indonesia under the PPP scheme to attract more resources for your infrastructure development?
Okay, I think I should give you one example that we work on one of the project in power sectors. So basically these are the model. So we need to have a cooperation agreement, a PPP projects between project company, which basically the sponsors, and then at the back of that is really you know, the bank, the lenders, and then we have the contracting agency who actually requests the guarantees for IGF, for IGF guarantee for the benefit of the project company. You know, of course, that can be transferred also to lenders. And then we, IGF, will decide whether we will use our own balance sheet or we will ask also Ministry of Finance to be a co-guarantor together with IGF. So we will look into what are the exposure of the projects that requires the cover from the government. Most important is really that in the cooperation agreement, in the PPP agreement, it has to be a financial obligation of the government so that we can guarantee that. So that's by the regulations. So I think these are the project that Central Java Power Plant that I mentioned. So these are the this is the $4 billion project, which is procured through international competitive bidding. When the tender is out, there are 4 from Japan, 2 from China, and 1 from Korea. And the winning bidder is the project company is a consortium of Indonesia mining company and 2 Japanese companies. And it actually enjoys, get the support from JBIC. Actually this project will hopefully be financial close early this month. So we are now really in the final step of issuing the consent letter for the amendment and get this close very soon. So the JBIC providing loan as well as the EPRG, extended political risk guarantees for other commercial banks. I think SMBC also one of the advisors of this project and potential, I think, financiers for this project as well. So this model, I think in the power sector, Mills has mentioned that Indonesia has executed power purchase agreements for more than 20 years. And in some projects, they are not enjoying government guarantee. But some projects which a government guarantee is really a deal breaker, then we need to work on that. So that's the idea of how we can encourage the private sectors to work in Indonesian context. And I think, just one more thing. I think on the context of ICIEC, I think IGF can help bring the information to ICIEC on which are the pipelines that suitable and can be worked out together. We can also be a co-guarantor, or we can work on the reinsurance scheme. These are various schemes have been also developed and discussed with MIGA. I think that would be also something that we, ICIEC and IGF, could go, have a further discussion on that.
Okay. Thank you very much, Cynthia. I think you've shared a good national perspective of how the guarantee fund for infrastructure of Indonesia allow, and it's a good example, allow politicians to dream without limits. Because usually when politicians put in their dreams or plans and their long infrastructure ambitions, financing becomes always a challenge against to how much they can achieve. But bringing all the financiers, the insurers, and all the key players will allow them to have access to locked funds, basically, and unlock them for realizing these dreams. I would like to allow in a few minutes the panels, if any of you have any specific question to any of you.
I'd just like to pick up on a point that Cynthia made, which is to do with the apparent overlap between what private market insurers are looking for in terms of project information and due diligence, and the list that you mentioned. One of the points I had written down was evidence of host government support. So it doesn't have to be a Ministry of Finance guarantee, but if we can show insurers, multilaterals, this is critical infrastructure, it's right at the top of the government's list. There isn't going to be a guarantee, but this is the extent to which we feel it's critical. If we could somehow communicate that information more effectively, I think it would help bring in that insurance market appetite, which will then bring in the investment.
Walid, you have something?
Perhaps I'd like to sort of follow through what Miles just said, because this is a critical point. I think the way infrastructure projects are developing in terms of the financing structures that are being put around them to complete them, they are becoming potentially less traditional. And this is a very important point in terms of evidence of support or evidence of recourse to a government through the Ministry of Finance typically, or sometimes through central bank. Okay? These are becoming perhaps less obvious in the form of a simple letter of guarantee issued by a Ministry of Finance to a particular project saying we will pay if they don't pay. Things are moving forward, perhaps in a more astute way. However, it does remain, it goes back to the central point of, even if the structure is slightly different or different, the centrality and the importance of these utilities are typically, and should be in all cases, with clear recourse to a government or with clear linkage to the government. So the point Miles is making would be very helpful for financial institutions if this effort does indeed resonate well with the insurers, multilaterals or private, because yes, it will probably unlock further insurance capacity for banks like ourselves to be able to go where otherwise we couldn't go. Yeah, so that's definitely on point.
Thank you. I think that's very clear, and then I think you highlighted earlier that sometimes borrowing for long term from countries where you have guarantees from governments, be it Ministry of Finance or central bank, does not necessarily reduce or remove the risks, and that's where the investors would go for multilateral insurers with more of covering up for the risks than the actual government, and it does add to the attraction for the investors for this specific. I wanted to use the last few minutes left for the audiences to allow them some space for any specific questions you may have to any of the panels. Yes, I am seeing one hand here. And the mic will be coming to you.
Good evening. My name is Uwais Diana. I'm from ICIEC. This is a question to Ms. Rosley. How is your risk considered different from that of the government of Indonesia? Because if you are guaranteeing a project and the Ministry of Finance is guaranteeing a project, I mean, what is the additionality of having something from IIGF? So kind of give us an insight into what is the objective of setting up IIGF.
Okay, as I mentioned before, the objective is that the government needs to be assured that the project that they are granting, if that needs to be, is a well-structured project. Before, you know, Indonesia has experienced before, back in 1998, that Indonesia got a claim, I think from MIGA as well, from other, you know, OPIC, for political risk simply from the issuance of a comfort letter. Only 2 paragraphs, but international arbitrations, you know, get Indonesia government has to pay for the claim amount from the private sectors. And then this could happen because of, you know, it's non-accountable process, because the project gets signed by PLN and the project company and the private sectors, and then after they sign, they agree together, and then they come to the MOF, get a guarantee, and require, you know, a support letter or whatever, a letter, a commitment letter from the government to guarantee the project. So, you know, learning from experience, Indonesia government says that, hang on, if anybody would like to have some support from the government at that time, you know, back in 6-7 years ago, we need to have a more robust and accountable system. Then they set up IGF to ensure that if the project happens to need a guarantee from the government, then it has to come through IGF. So it's not directly goes into a balance sheet of the government, but has to be ring-fenced within the IGF balance sheet. So that's the idea. So it's kind of setting up, the quote-unquote private insurance within the Indonesian context. So I think I agree also with Mills and Dr. Walid that, you know, more and more, the best guarantee is no guarantee. The best guarantee is no guarantee. So long as you have a well-structured project, you don't need any guarantee. So that's the idea. But now, in Indonesia context, in certain cases, like, you know, PLN for this big project, I think for the projects of $500 million or $1 billion, I think, you know, private political insurance or some of the sponsors and banks can absorb PLN risk because of 30% or 40% of their revenues comes from the public sector obligation from the subsidy, which prone to a political process in the budget, in the parliament. So for a big project, for, you know, 4 billion, 3 billion projects, you know, guarantees is something that needs to be worked out. I don't say that it has to be full-blown guarantee from the government, but we need to ensure that what are the risks that is really, really on the hands of government that they can manage it. Okay. So that is something that needs to be guaranteed and needs to be calculated. And through IGF, the guarantee amount has to be measurable, and there has to be a limit, not as a previous experience where whatever the arbitration says about the guarantee exposure, then the government has to pay. So that has to be, a buffer and a ring fencing within the IGF.
I just wanted to maybe chip in with a question to an audience who is not a panel member, but he's here with us. Since ICIEC does everything on Sharia compliance, and I'm thinking while you're discussing all these complications, how can the issue of issuing sukuk, for example, for development, which is the Islamic bonds, be affected, either promoted or adversely affected otherwise by the insurance on investment process and the credit guarantee? Ahmed Fayed Al-Jibali, he's here with us, or Director of Islamic Finance Services of the IDB, maybe can advise. We've not mentioned one topic on Sharia compliance, and I thought to bring it in before we close would add value to the audience. Thank you. I will come back to you. There is one more hand later. Thank you.
Thank you very much, Dr. Abdul Hakim. Just to share very quickly our experience with structuring sukuk attached with a guarantee from multilateral and also from government, which is the model has been structured under the Global Task Force, under the World Bank, IDB Group, and United Nations for the purpose of recovery and reconstruction of the MENA country. By having a MENA guarantee facility, collecting all the guarantees from MDBs and from government sovereign guarantee in a different level of rating, and have it combined in one fund. Okay. And looking for the benefiting country, which is based on the project and based on what has been provided to the committee, which is the task force responsible about this using of this guarantee. I think we succeeded, alhamdulillah, from Sharia point of view, from project, from attracting contribution from supporting countries, and also benefiting countries. They came all on the same table, and we can share this type of structure that we succeeded to develop in IDB group. And this is the benefits of that also. This will not load the country financing this mega project with any extra debt in their budget. This is number one. Number two is something in complement with the BBB, because BBB always given to private sector for longest time, like 20 years to 25 years. This will help the countries to go for this mega project and generate new assets to their budget in a shorter time and more efficient. Thank you.
Thank you very much, Dr. Ahmed. We have one last question from Mr. Kadiki here.
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Dr. Kadiki. I'm from Yaqeen Holdings from Libya. We invest in mega project and we have funds available, but we don't have the right management, so we look for Islamic management. Question to the young lady here. We are very much interested to invest in Indonesia, but do your guarantee that you provide, question number one, is it local currency or international currency? Number two, do you have an aval for international? Three is, are you under IMF that you have not cleared your debts through IMF? So if there is any dispute, for example, and it goes to the gentleman also with the financial brokers, that how can we make the settlement? So these are the three questions. Thank you very much.
Two questions that I hope you can answer them with two words. One is that the guarantee, is it provided a local currency or hard currency? And the other one, in case of there is any dispute, do you resolve to international arbitrations, or it has to be done locally? This is from a foreign investor point of view.
International arbitration for sure. For the currency, it depends on what are the currency, in the cooperation agreement, in the PPP agreement. So for example, in the $4 billion project in a power plant with Japanese investors, the payment in the power purchase agreement is in US dollars. So there are rupiah portion, local currency portion, and US dollar portion. So we follow whatever the exposure agreed, the currency agreed within the cooperation agreement.
Thank you, Cynthia. I think you can follow up discussions later on. I would like to thank all the audiences, thank our panel members, Hashim Hussein, who left from UNIDO, Cynthia Rosley, the Chief Executive Officer of the Indonesian Infrastructure Guarantee Fund, and also Walid Sanidin from the SMBC, and Miles Jonathan from OWN Singapore. We also thank the ICIEC team, Hussein Jama and his team. Thanks to Chief Executive Officer Usama Qaisi for giving us the opportunity to share all this with the audiences. And of course, we thank the audiences and the organizers here for being here with us. We wish you all the best for the rest of the day and the rest of the meeting. Thank you very much.
Give a round of applause. Thank you very much, Dr. Hakim, for conducting. So this is the last moment that we would like to welcome Mr. Osama Qaisi, CEO of ICIEC, to deliver the souvenirs to all the panelists, speakers, and also the moderators. And please, all the panelists, please step 2 steps forward to receive the souvenirs from Mr. Kaisi. First, we would like to welcome Ibu Cynthia Rosley to receive the souvenirs. Please step forward. Thank you. Applause, ladies and gentlemen. Thank you. And next, Mr. Walid Saridin. Okay, again, the last applause of today's event. Give your best applause. Thank you very much. And last but not least, we have Mr. Miles Johnstone to receive the souvenir. And do please a group picture together. Yes, Dr. Abdul Hakim already? Yes, the souvenir is already there. So, save the best for last, I guess. Thank you very much. Ibu, please stay with us together. Give a round of applause and do pose in one group photo session in one frame. It will be documented by our photographers here. Please step forward and give your best smile to the camera. Smile to the camera first and then give your thumbs up to the camera. Okay? I will count 1, 2, 3. Thumbs up. Thumbs up. Yeah, there you go. Thank you very much, ladies and gentlemen. Thank you very much. And we already reached the end of our program today. Thank you very much, everyone, for participating, for joining, and also contribution from speakers and organizer. We would like to say, have a great evening. And from me, wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.